Hi, and welcome to this chapter, Supply and Demand. How to find it and where. What exactly are supply and demand zones? They are an imbalance in order flows where one zone has been created and price itself could not penetrate. The first touch reacts to the zone, the second touch from the price and reacts again to the zone, the third touch from the zone becomes a lesser reaction, but price does not react, just not as significant as the first or second touches. The more times a demand zone is touched, the less power of freshness does the zone itself have. A supply zone is created when price rallies and cannot go higher. It essentially is hitting the roof, thus creating a supply zone. A demand zone is created when price falls and cannot go lower. It is essentially hitting a floor, thus creating a demand zone. The higher the time frame, the stronger the zone, but the amount of times it has been touched is crucial. Fewer touches, the more times the zone has strength. The more times a zone has touches, the less strength it has. When a demand zone is broken, it must retest as a new supply, and when a supply zone is broken, it must retest as a new demand. There are certain tips for when trading supply and demand. Let's go through them. First, look for the significant move. Then follow to its origins where you might find a suitable level to evaluate further. Make sure the initial move is significant on the same time frame as the one you use for the viewing on your candidate level most clearly. Check the distance that the price traveled before the trend ended. Longer distances mean initial imbalances and improved probabilities in the future. The stronger the initial move can contain a few small retracements, but not so many that make this move slow or weak. Avoid opposing levels in the same and immediately higher time frames. Prefer to have a clear road ahead for you to trade on. Make sure your level is placed correctly, low for demand and high for supply, in relation to the big picture's important tops and bottoms. Trading the first return to a price of valid level carries the highest probabilities due to a larger imbalance. A valid level is considered fresh if price has not returned to it since its creation. It has nothing to do with how old the level is. Below you can see on how we draw these zones, and this is on TradingView, but we're going to show you on MetaTrader 4. Obviously all a supply zone is a roof up top where price failed to penetrate, and the same for demand zone is where price failed to go down and it failed to penetrate the demand zone below. How we find these zones is how we're going to show you in this video quickly. Okay, so let's just quickly remove this indicator here. The currency dashboard large, just delete it. Now, in your welcome email, you received a ext4 file called a subdem indicator. We added it in the beginning of the first couple chapters, and then let's add it to our chart again just for interest sake in case you don't have it there. Subdem, click on it and drag and drop onto the screen. Press OK. Close the navigator. And let's go to the weekly, and now you'll see the subdem indicator automatically adds the areas of supply and demand. Obviously supply is the red and demand is the blue boxes. Now if you do not wish to use the supply and demand indicator, you can simply draw it with this rectangle up top here. You click on it and you can just draw these boxes. You can even draw it over the red boxes, because what we're going to do later stage is we're going to remove those boxes itself. So we're going to go like this. Just copy it all over. Like that. And another one here. Let's now go onto demand zones as well. Let's go onto the ones below. And the other one as well. Okay, so now you have all the zones plotted for you. Let's now go to the daily, see if you're missing anything. Yes, there's one here. Let's get that right. Let's add it there. That's now another demand zone. So what we can do now is that we can remove our indicator. We simply right click, go to indicator list, go to subdem, click on it and then press delete. Now you'll see that all the other items are gone. Now we have a clear representation on where our supply and demand zones are. Okay. But now we've got to look at the charts in a fuller appearance, so let's zoom out one, and we can just see where these zones are acting as further along on the charts as well. So this was acting like that there, Okay, right. So let's go into brief on what we just did. Okay. Remember what a supply zone is. So let's add this area here, which is a supply. Let's type it out. Supply. Let me add that there. A supply zone is where price rallies up. It couldn't break higher than that, and price fell down from it. Rallied up, tried to break that zone again. It fell down from it. Price rallied up. It couldn't go higher than that, so that's also another supply zone. Okay. So let's consider this zone here. This was initially a demand zone, but it was broken. Now when a demand zone, as per our rules, let's go have a look at our rules again. What does it state? When a demand zone is broken, it must be tested as a new supply. So let's go see on our chart. This was a demand zone over here, as it was keeping price up, or you can call it support. Demand and support are the same thing, so that was demand, but price fell through that. You can see first touch it went shot up, second touch it shot up, third touch it shot up, fourth touch shot up, fifth touch shot up, so that the more times it got touched, the less powerful that zone was. It was broken and then retested as a new supply, as per the law. It is a law. If demand is broken, it has to be retested as a new supply. And it fell. The price came back up more or less close enough. It created a new supply zone, and price fell. So let's now zoom out one. This zone here was an initial demand zone as well. There's a demand zone, rallied up, came back down, touched that zone, shot up again. So what we see now is that this zone was a demand zone turned into a supply. Same story as this. It was a demand, turn into a supply. So now let's go quickly onto the zoom in, and now we can see that this zone is now acting as a supply zone, meaning that price would like to fall every time it touches here now. So ideally what we should be looking for in this touch here, a sell. That is correct. So now we have to wait, but how many times has this zone been touched? Once, twice. So it's still fairly strong as per our rules. So if we get a one more touch into here, we can expect another fall down. But because this price has been touched the second time, ideally we'd like to see a larger fall down first. Then maybe at a later stage a one more push up, and then the ultimate fall down again. But remember, the next touch will be even weaker than the previous one. So could we see a larger drop or potential breakthrough? That is quite a possibility. So let's now go and look at a demand zone scenario. Price failed to break this level over here, as you can see, kept going down. Price itself kept coming down and down, and then it shot up. So we can make that a demand zone or a support. Price fell down, created a new fresh demand zone again. Price touched it once, shot off, twice shot off, basically third time shot off. That's another demand zone there in itself. And again, this is now another demand zone here on a daily time frame though. So that in itself has now created a daily demand. So what ideally we should be looking at is an area on a 4 hour that had some sort of supply. As you can see, price fell, came back up, so this would be an area of supply. We could even see price come all the way up to this level. Now, is this level considered fresh? Yes, because it was only touched once, so we could possibly see a reaction here. That's a good possibility. That in itself would be a new supply, but on a 4 hour time frame. So it's all about finding these small pockets around on a time frame. As you can see here, this was an area of demand was broken, retested as a supply, and it fell down. So we've broken the supply. Ideally, if it's going to push higher, we probably have to see something like this, where price breaks through that level, comes back to retest it, and then continues back up. See that into the new supply. We only sell in a supply zone. We only buy in a demand zone. That's the rules of supply and demand. Only sell in a supply and only buy in a demand. So where demand is broken, as we mentioned here, where demand itself, where it was demand, is broken and turned into supply, we'll be looking to sell. Now, where let's say over here, I can explain it as a better example. That should be fine. Like where this over here, where demand, or supply now is going to be broken, it will turn into demand and then shoot off again. So these levels are very key, but we're going to get into what key levels are now in the next chapter. So for now, all you need to remember is to find the zones on the higher time frames, because they are the strongest zones you could get. The higher time frames are most important, and then ideally follow where price failed to break higher for supply, and we sell in those areas, and where price failed to break lower is the demand, and we ideally like to buy in those levels. Now, consider the freshness of the level. If it's once, twice, or 3 times, it's still good enough to either sell for a supply or buy for a demand. But after that, it starts becoming a bit dodgy because, as we mentioned in the rules, the more times the zone is touched, the less power it has. Very simple to understand, guys. It's not too complicated. So let's try go do one more example on any random pair quickly. Let's go to EURUSD. And let's go to templates, we add FNFC there, and let's go to 4-hour daily. Let's go on to that. Okay, let's just zoom out once so we can see better. As you can see, these are all our zones on the weekly time frame. The indicator will do all the hard work for you guys, so you don't have to do anything. Now, obviously where a demand zone was, it will disappear because it was broken. So you have to now go look on your chart from the left to the right. What was this acting as before? It was acting as a demand. It was broken and retested, broken and retested, broken and retested. It's still holding here. Okay, so now ideally this zone itself is a demand turned into supply. So now we could ideally, you can see where the indicator is already starting to make a supply zone. On the daily time frame you can see it better, which is that there. So now we can have a weekly demand, which is at the bottom here, which is not fresh anymore. So if this does fall, this can fall relatively quite far, and if it breaks this zone, it can fall even further down to the lower zone again. So on the monthly, there's a zone right at the bottom. Ideally, that if price itself wants to fall, it could fall all the way back down to here, which is quite a big deal. So let's go back to the weekly. So we have our zones there, which is demand. Zoom out quickly. It was acting as demand, and it was broke through demand, and it's now acting as supply. So what do we do in a supply zone? We look for sells. What do we look for in a buy zone? In a demand zone, we look to buy. So it's not too complicated. Let's just remove this template here, the indicator. Let's first of all actually go down to daily time frame, see what's missing there. Let's just zoom in. Here is a demand zone, yes. What is this here? That is another demand zone. What is this done here? Demand. Let's get across like that. What is this here? Another demand. But it's sitting on a weekly level of demand. So we know that that is that. As you can see here, guys, look at this. This was acting as demand, broke, so it's now a supply. Down, test, supply, down, test, supply, down, test, broke through. Now what is supply turn into? Demand, and then we're looking to buy in a demand zone. Same set for here. Up, that's a new fresh demand zone. This even here could be a demand zone itself. You see the indicator is not perfect, it's the indicator. You've got to look at these zones and actually plot them yourself as well sometimes. As you can see now that this is a demand zone that hasn't been broken yet. So ideally it's been touched once, twice, 3 times. If it does manage to break through here, great, fantastic. We're looking to continue for a sell, because if it's a demand zone turning into supply, we could ideally see the sell from the supply zone to the next fresh demand zone, where we might see a possibility for a buy. So something like that. That's a possibility of us looking for trades on that there. So right guys, very very simple. You want to delete your indicator, you go right click as you said, indicator list, click on subdim and you delete it. And now you can see all your zones are plotted, even to the monthly, and your hard work's now done on finding the zones. So what you want to save, you go to Funafix C at the bottom, you go save profile as, save as Funafix C, okay, done. Now your hard work's done. The indicator helps you do that. You gotta remember to remove it. So now we have this situation where it's fresh on a weekly. Is it a weekly level supply? Yes. What's it below it? Is a daily level supply of demand. How many times has demand been touched? Once, twice, 3 times. So we now know the 4th time could be weak, and we could ideally see a complete breakthrough and a further drop down with a retrace to test this old demand as a new supply as per the law, and then sell again down until it reaches this demand zone, which is considered fresh because it's only been once. So the second touch here would expect a reaction and go like that. Not too complicated. Okay guys, with the next chapter we're going through key levels. Now a key level is much what we've done here, but it's only on a weekly and a monthly and a daily time frame. Nothing on a 4-hour time frame as per the 4-hour zones. It's monthly, weekly. It's called a key level for a reason. It's a key psychological level, but we'll do that in the next chapter.